Anyway, I'll be mentioning the overall market data and stuff that might help with our argument later. So just kind of pick up what I'm sharing. It's quite interesting. Okay.
Yeah, I'm getting your feedback.
Got this guy on the quantum chat. He like keeps saying sell quantum. Like what Yongjie? Yongjie. Did you see it?
Yeah,
it's annoying. Why? Freaking troll. Non-stop spams, yeah.
Nonsense.
I feel so bad for the admins, like, honestly.
I think as always, people are just trying to create a lot of FUD for no reason. Yeah, it's a pure pain in the ass. Wait, let me just get the stream.
Wow, quantum looks good.
Okay. Wait, hold on. Let me get this into Telegram as well. All right, folks, let's get started. Welcome to Crypto Grinders live webinar, 13th of September 2017. Today, we have a lot of agendas to cover. We're going to cover the overall markets. We're going to cover the current FUD that has once again been laid down on our asses because of JP Morgan, Jamie Dimon. And of course, there is speculation that cryptocurrencies will be banned across China exchanges. Whether or not this rumor is going to suffice, reading the reports, I do not see any hard evidence as of yet whether or not cryptocurrencies are going to be banned. But nonetheless, we are still going to soldier forward. We know the direction of where cryptocurrencies and Bitcoin is headed. So let's get started. Okay, so to start off first, let's introduce, of course, JJ Andy. For those who are unfamiliar with this chat, this is my team. So JJ Andy is my partner in Crypto Grinders, together with Charles as our assigned researcher. He's our lead researcher for the team. And today, JJ Andy will be covering the overall market analysis and giving us the market update, followed by Charles, who will be giving us the main topic for today, which is long-term investing in cryptocurrencies and, of course, rebalancing and discussing what is the bank's intentions for creating this FUD. All right, take it away, JJ Andy.
All right, so welcome folks who's here for the first time. My name is JJ Andy. So I'm going to cover the overall market with regards to the overall market in terms of the US economy and the world. And there's some interesting pointers that will actually help out with our argument later, okay, when we talk about JP Morgan. So first things first, the US government just passed 20 trillion in debt for the first time ever. I think this is one of the biggest news for now. So Trump has actually introduced a certain legislation to delay and to allow the Treasury to actually loan the money, all right? And therefore, it's been pushed back to 8 December. So they have passed a bill for that, so that it can suspend the debt ceiling. All right. So with regards to that, now the main important thing was that iPhone 10 was launched, right? So I think some of you and most of us got very excited. We started watching how Tim Cook present and stuff like that. But Apple stock dipped. Wall Street didn't turn out well today. In fact, Nasdaq and both Nasdaq S&P went down quite a little bit today. And also North Korea actually kept the North Korea because of the UN sanction that came 2 days ago on Monday. So therefore, UN has actually introduced new sanctions on North Korea. There's also news that North Korea per se are using Bitcoin or trying to hack into South Korean exchanges, just to get to Bitcoin so that they can have extra funds to fund their campaigns. So this is a rumor, maybe true. And then so North Korea is actually keeping the market on edge. And they are vowing to redouble their efforts to fight off the US threat. Okay, they call it. All right. So there would still be some market volatility coming through. There should be some risk on coming soon. All right. So watch out for North Korea. Now, on top of that, we have the Hurricane Irma, right? So our heart goes out to those in Florida. But the thing is, Hurricane Irma wasn't that bad as predicted by the authorities. So it didn't turn out that bad, all right? So that's why the economy is actually kind of improved from Monday up till now, all right? So there's also PPI that was just released, which is the Producer Price Index. That actually give an indication of how the manufacturing sector is doing in the US. So it did went up 0.2% as compared to the month of August. But inflation is still sluggish. There's also uncertainty. Investors are unsure whether there will be a rate hike coming at the end of the year, right? So they are still pretty unsure. So US dollars as of now is still very controlled, very mild. We are still monitoring it and see where it's going to go, all right? So there's one more thing, it's gold prices, all right? So last Friday, gold prices went up to a year high. That's very, very interesting. But it has actually retraced a little because people are more risk on now. They're willing to take more risk. Now that North Korean issue has slightly simmered a little, and Hurricane Irma has actually reduced in the category. So the damage is less, and therefore investors are back to risk on. And so they're back to stocks and the stock market overall. And last of all, like I say, market remains skeptical if Fed will raise their interest rate. I think this is the main thing moving on from now to December. I'm also looking closely at how Trump's government is going to pass the bill on how to eradicate the 20 trillion debt. I mean, it will take some time. In fact, a lot of investors and speculators are saying that they will need to introduce very extreme measures coming through March 2018. So we shall see with regards to that. So hand over the time to Ryan and Charles, and we will start the discussion on JP Morgan's FUD later. All right?
Okay. Thank you so much, Andy, as always. Okay, guys, so let's just do a quick recap of the current market cap and what's been happening in the last 24 to 48 hours. Okay, we were obviously having quite a nice run previously, but all nice runs usually end very quickly in cryptocurrencies for a number of various reasons. So just so you know, we are currently standing at 132.4 billion in terms of market cap. Now, we were previously, just a few days ago, touching 180 billion, but unfortunately, due to very strict government regulations from Korea, China, and even the US, then naturally everything started to tighten up. People started dumping their cryptocurrencies. Now, I think when you look at the space, people are just worried because they do not know how to get their Bitcoins to fiat. Now, if everyone was to say they are able to just use their debit card, for example, if let's say there's a Pay debit card or a Zappo credit card, a debit card where they can just go to the ATM and withdraw fiat, then if everyone just knew how to do that, they wouldn't panic. Because right now, everyone seems to want to buy fiat to Bitcoin or fiat to Ethereum, and just because there's some lockdown or regulations become strict on our banking relationships being cut off from all these exchanges, people start to panic and they dump their coins. Now, what is the implications of that? When you dump your coins, meaning that you're selling your coins to someone else. It's very simple. It's not like money here. Okay, money, fiat, and everything like that will continue to be reprinted. Unfortunately, for cryptocurrencies, when you look at Ethereum, when you look at Bitcoin, there is a limited supply. So when you do that action, yes, you are suppressing the price, but you're always selling it off to someone else. Okay, so there is, literally you think that, oh, wow, I'm so smart. I sold off now, I'm going to come back in later. Try to understand one thing. You are trying to accumulate more cryptocurrencies. You don't want more fiat. Okay. For now, if you think that fiat is important, sure, because not every merchant will accept cryptocurrencies as a form of payment. You can't go to your local hawker center, let's say here in Singapore, and say you want to pay $2 to $3 for food, and they accept Bitcoin. They don't do that. They still accept the local currency. But what if you could actually just hold on to your cryptocurrencies and maybe go to the ATM machine and withdraw fiat? You know, it still stays in the form of cryptocurrencies. You don't have to immediately dump everything. So all these things that are happening is just creating the stage, setting the stage for what's to come, right? Okay, so let's just quickly cover the top 10 cryptocurrencies first, and then after that we'll be able to go into the main topic today. So as I said, we were almost at 180 billion, 178.8 billion to be exact, and currently now we stand at 132. So that works out to roughly 40. Wow. Works out to 44 billion has exited the market in a span of, let's see, from the 2nd to the 13th. So around 9 days. 9 days, 40 billion, guys. Whew. Okay, so obviously everyone's portfolio is bleeding. No one is spared except if you were in trick coin or some shit coin that is being pumped up at the moment. Dope coin is all going up. Yeah. Congrats to whoever managed to have the foresight to buy into that. Congratulations to you. Hope you live a long life. Okay, so now with that being said, I am going to be making sure that in the future, right, people understand that every dip will happen. Whenever a dip happens, it's an opportunity for accumulation. The reason why I'm doing a combined chat today, or we as a team are doing a combined chat today, is because we need to help people to understand where this is going. Because some people who are watching, who are new to cryptocurrencies, they don't understand what's happening. They're very fearful. They're liquidating their portfolios left and right because they want to keep fiat. The objective of a cryptocurrency portfolio is not to keep fiat, but to accumulate more Bitcoin or more Ethereum, whichever you came from. That is the objective. Now, regardless of the price of what one Bitcoin is worth, your objective is to accumulate more cryptocurrencies, because going forward, this is where the market is going to be. This is where the technology, the infrastructure is all around here. And if you do not understand that, that means you clearly need to go and take a step back, start reading more books behind why Bitcoin was created. Go and read the white paper. Try to understand what Satoshi and the team are trying to do. Okay, so with that being said, market cap. Let's cover the top 10 cryptocurrencies first, and then we'll go into the good stuff. So we just cover the top 10 today. We are looking at Bitcoin currently at 63.2 billion, still up as of year to date. Ethereum, 25.238 billion, still up year to date. Bitcoin Cash, of course, being created out from the hard fork. And then we have Ripple at 7.5981 billion. We have Litecoin at 3.133. Of course, Charlie Lee, I think, shot his own foot with the Twitter announcement. And then after that, his own Litecoin also started to tank. Dash, we have stands at 2.19. We have NEM at 2 billion. We have Monero at 1.6. We have IOTA at 1.4. Ethereum Classic at 1.31. We have Omise Go at 974. Very, very strong. This is one of our picks for the month. Neo at 902, gradually dropping from within the top 10 spot. Currently it's at the 12th spot. BitConnect, 759 million. Come Quantum 717. Then we have List at number 15. So the number 14, 15, 16 spots, right, I think are pretty crucial as well. Gradually, I think we will see a shift, but Stratus is somehow taking a very, very big hit today. Our top loser within the top 15 today is Omise Go, and our second would be Neo. And of course, Quantum is taking quite a big hit today, despite the fact that it's the main net launch. Okay, so guys, let's go into the main topic today, courtesy of Charles. Okay.
All right, guys. So my name is Charles. Can you hear me loud and clear? Okay. So today I'll be talking mainly about what's the FUD going around and everything that's happening. So you'll get a big picture and those that want to update. So basically, I'll just share my screen first. So first of all, for those that I think were new to cryptocurrencies would know that, the July we had it worse, man. I think Andy and Ryan all can agree that July felt more painful than now, right?
Yeah.
Yeah, and like I guess this, if you look at the chart right now, I mean, if how many of you all at like 4,500 would think that it will go up? Is sort of quite impossible because markets always correct. You must understand that there's always a correction, and then it will start going uptrend again. There's no way in the world where a market, even as good as Bitcoin, will continue going up. It has to correct for a while first, consolidate a bit. Some people need to sell, make some profits, and then we'll start moving up, even as a continued uptrend. So there is explanation for this, but it's market cycle. You guys must understand the big picture first. So I guess mainly in the short term wise, we're having a lot of downside pressure, mainly due to a lot of FUD. So I guess we'll just dissect one by one each FUD. So I guess we'll start with the JP Morgan one. So basically the CEO, Jamie Dimon, he said that Bitcoin is a fraud. I mean, fraud is a very powerful word to use and use it on CNBC. And then for a CEO coming out to call out such things, it's really a big, bold move. So, I mean, when I look into it, I mean, as a person, I'll be a bit, I mean, for anyone that do not, you must understand that bulk of us do not know what cryptocurrency is. We are quite a minority in the whole entire market. A lot of people, mom and pops and stuff like that, everyday people are still very used and accustomed to daily financial markets like stocks and bonds. Even stocks themselves are not something that they would even invest. They are more conservative, maybe bonds or something like that. So he coming up to say such thing is going to take a blow on Bitcoin or like cryptocurrencies no matter what. But I guess what you can understand is that, I mean, investors, like people from JP Morgan, they are investors under his umbrella. I mean, they're all clients, maybe like rich net worth that invest in their funds. And of course, many of the funds want returns, good returns, and profitable returns. And if they don't get such the return, and then they start looking up, they see that, oh, their friends is investing in cryptocurrencies and they're making huge amount of gains. And then I think like, man, what's JP Morgan doing, man? I don't even getting enough money. So you must understand that he has a clientele and base and to satisfy. So he has to.
I hope his clients are not that stupid though.
Yeah, so that's why. So
I'm just saying, right? I mean,
yeah.
if you are part of a JP Morgan, you're a private banking client, and you don't even know what cryptocurrencies are, or at least you know about cryptocurrencies, and you still have to listen to this guy. Okay, that means you didn't really do your homework, man.
Yeah. So I guess at the end of the day, he has an agenda ongoing. So what I can tell you that no matter what news article, whether it's good, true, or false, just always understand that there's always an agenda for people coming on to news. So it's always good to read between the lines, be it a future FUD or anything like that. Try to keep calm and understand the situation. Read it, don't panic, and just understand the situation first. See the facts. Yeah. And then from there, you can come to a conclusive argument or like a conclusive reasoning on what's going on. And from there, you can make informed decisions and make better trades. Yeah. So I think the next one, of course, is mainly about the Charlie Lee talking about, I think I couldn't find the picture. Basically, he tweeted in the afternoon, I think, regarding something like he has knowledge that the exchange are going close. I mean, honestly, Charlie Lee, he's a creator of Litecoin and he has a lot of weight. I mean, for him to tweet such thing is quite big news, whether be it true or not, because he said that he has some source. So I'll say that his brother does run an exchange in China itself. I think Shanghai, if I'm not wrong. Like, yeah, Bobby Lee.
Bobby Lee, right? BTCC. Mm-hmm.
Yeah.
Okay.
So at the same time, maybe this is where he might have got his news and stuff like that. Right. So at the same time, he did acknowledge that this is rumors and it's still a source. And he did explain that if it was true, he just fast forward the crash, that sort of like a crash that might happen. Basically, it will have a negative impact on the cryptocurrency market because basically doors are shut to China. It's a fact. Sure. Yeah. Mm-hmm. So at the end of the day, there is still downside pressure in the short term. But if you look long-term wise, you think about it, the fundamentals of Bitcoin, it has not changed. It's still hard cap. You can't print any more Bitcoin, not like the government where they can print out like the Fed, they can print out money. And at the same time, it's always ever growing and it's immutable. That means it's in the ledger, it's public. Everyone knows what's happening and you can't mute it. Yeah. So cryptocurrencies, no matter whether you like it or not, and you hate it or not, is here to stay. It will forever be there. And it all depends on how many people use the network and how many people get adopted. maybe currently now you'll see a decline in people, but in the future, it'll still be there. Yeah.
I think it's very interesting to see, especially JP Morgan, now coming in and making such a statement. I mean, there's so many things that we were discussing a little bit earlier, right, guys? Why not discuss? Why go on CNBC and specifically attack Bitcoin? Like, why not just say talk about North Korea? Why not talk about the growing debt? That address the growing debt, the overall economy, how bullish it is, how bearish it is. Talk about something else. Why specifically want to attack Bitcoin? I thought we are like this small little 120 billion, 130 billion market cap. Why bother about us when there's so many bigger fish to fry? So it got me thinking, and I realized that there's always a reason for someone of this kind of status, and this kind of financial status to come out and make a comment on CNBC. It's mass media. It is meant to create, public fear. That's for sure. That's why we're currently standing at 3,754.9 USD to one Bitcoin, which is perfect, right? Please, by all means, just sell down so that we at Crypto Grinders can just mop it up. I will mop it up for sure, because I feel that no matter what, this is our chance, right? Because I wasn't buying any Bitcoins at 4,000, 4,500 for sure. I like to see corrections. In fact, I don't even find it's deep of a discount at this moment currently. I really don't, because we were buying at what, bro? During July, June, July was what? 27, 28, 29, right?
Yeah,
so
24,
24, even 24, 2000, 1008, that was the dip. So those were the times, man. And if this is going to be one of those times again, for sure, my money is in. That's how you become rich, right? You want to be rich, you buy when people are panicking. And if people have to panic, people want to dump their Ethereum, people want to dump their BTC, we'll buy it up. Feel free to sell it to me, man. Okay, so Charles, so just on your take, right? What is your take in terms of why would Diamond, mention something like this? I mean, let's think about other than just the news. Let's talk about other than just the news. What do you think is his intentions? Because if he already mentioned out loud that he's going to fire any trader who is caught trading Bitcoins, I mean, wow, really? You're trying to tell even if your trader, right, was going to try to buy some Bitcoins, and you're like really suppressing the fact that he can't even do that. That means a private banking prop trader cannot even do whatever he wants. Yeah, he's not going to trade for the bank because it's not approved yet. All right, but you mean he can't even do it on his own leisure time on his mobile phone or whatever? I mean, wow, that just shows like how much authority, and you just want to just show fear. You just want to create a lot of fear. And when I look at all this, I'm like, man, that's the reason why I even left banking, man, because I don't want to have to take shit from other people, because I know that at the end of the day, if we as a people come together and hold and prop up this price, it's not going to go anywhere, right? It's not going to go anywhere, because like I said, there's only ever going to be like currently now 16.5 million Bitcoins being circulated. If no one is selling to you, who the heck is going to suppress anything, right? Someone has to sell in order to suppress the price, right? But if we are not going to sell, we're just going to keep everything, then the price will maintain. It's just the way it is. It's just whether or not do we think collectively, or do we want to allow the whales, who are manipulating the order books, to push and suppress the price and create that fear in us. And when we read the newspaper, we're like, oh God, I can't get my fiat. The whole idea is not to get fiat. The whole idea is to get more Bitcoin. So with that being said, I mean, this is just my thoughts, right? I mean, do you have anything that you want to add on?
I think for anyone, like I do see like some people in our signals group, they're saying whether it's a good opportunity to like sell your Bitcoin now, like hold fiat and then buy back in, because they say that, it's going to dip lower. So I guess yes, that is considered a strategy, but at the same time, you must understand that there is a lot of risk. I mean, like it's very hard to catch a falling knife. I mean, yes,
sure.
Maybe predict that there'll be downside pressure.
I think Eric has something to say. Eric just came on, guys.
Can you guys hear me?
For sure.
Yeah, which it's always a bit of a gamble when I'm going to say something because I could totally be extremely outspoken. I think people need to look at this though from an anonymity and a clarity perspective. I was just shilling and screaming in the chat that Jamie Dimon is a scumbag. As someone who works with people who used to work for J.P. Morgan Chase and understanding what these banks are all about is they are fully interested in a credit-based economy, and the concept of that is that they manage their own ledgers and their own formats and technology to kind of keep track of everything going on the back end. So it kind of, from one perspective, the anonymity of Bitcoin and the, I guess, hidden perspective of it kind of is something that's inherently against what he does, because what people don't realize is interest based off of credit is what they use to invest into other things. And when you think about what happened in 2008 through the housing market, that's what happened is they let out all of these terrible loans and loans with really, really bad people with terrible credit backgrounds. And so, of course, this guy is fully against the concept of Bitcoin. It goes against his own personal interest. And I'm not saying greed is something that rules the world, but it's absolutely something that people need to remember, especially when you're talking about the U.S. economy, which, JJ, Andy and I were talking last night about this, that this is coincidental that this is coinciding with what I think is going to be a gigantic pullback in the U.S. economy. So just my perspective, but this goes against the whole concept of anonymity and I think clarity, because that's what the ledger does. That is really the whole basis of Bitcoin, is understanding the concept that everything is transparent. And when you eliminate that process and have centralization, there's 100% clarity why Jamie Dimon is going to come out and say anyone who's using Bitcoin is going to get fired in my company or blah blah blah. He's looking after his own best interests, and I can understand that from his perspective. So that's all I got to say. Sorry if it's a little too personal. It's just
No, it's not, man. In fact, it makes a lot of sense, right?
I work on my team right now with someone who used to be an anti-money laundering for them, and it's so ironic that they have that team there, because they are essentially, all these banks are gigantic mafias at the end of the day. And they're playing a game within the white collar crime aspect. It's just we, the people who are believing in a democratic process of pushing up a coin in a different way, whether it be libertarian or whatever your view is these people who are used to a very old world style of trading and profitability and economics are having a tough time adjusting. So it makes total sense that this guy's going to come out and start throwing stuff. And I think that everyone needs to look at the flip side of this whole China thing, is that this is the world adjusting to the entrance of a modern day new currency. So I think while everyone's freaking out about the FUD, this is a lot of good news, because we're all trying to adjust and flex ourselves a little bit to become part of this new world where we're in a ledger-based system. Sorry if God is speaking over and it's just showing Ryan's face while I talk in the background.
Oh, no worries, man. Eric, the chat will want to know a little bit about yourself, because I think you didn't introduce yourself. So
it
they want
just
to
came
know,
out of the blue, man.
Who's this dude?
I'm God. I am God, and I'm just voicing over everything, and that's what it is. I'm a security specialist, and I did the video on Sunday, but I work in New York, and more importantly, I work for a cybersecurity firm, and I try to keep track of everything that's going on economically and, more importantly, in regards to security. And I'm going to be helping out crypto grinders moving forward with a lot of security in regards to this field: safest wallets, safest exchanges, most of the anonymity regarding coins, and really the best way to secure yourself. So moving forward, if there's something that I don't know, because I don't know everything and I work with people that do, I'm here to help you guys out and can really try to be a voice of reason. During these Wednesday calls, I am at work, so that's why I'm not putting my camera on. But on Sunday calls, I'll be happy to show a face and be there. But if you guys have any questions or any inquiries whatsoever, please let me know. I love research and I love learning things. So if I don't know something, I'm a very open-minded guy. I'm happy to learn about it, and I'm happy to take criticism and feedback from you guys.
All right. Thanks so much, Eric, for the very quick introduction.
Yeah.
Okay, so
I realized two more things about JP Morgan. Like, I mean, even though Mr. Demon mentioned like Bitcoin is a scam, whatever not. Well, JP Morgan is in the Ethereum Alliance, right? And JP Morgan has
exactly.
collaboration with Zcash. Like, come on, what are you talking about?
Exactly.
So you're saying you
man.
can't trade Zcash and Chase, like, so what are you
That's a
talking
very
about?
good point. That's a very good point, right? And
I just
I
remembered,
even forget about the EEA, right? Oh
yeah,
shit!
I just remember
Wow.
EEA, and I'm like, so you're saying Bitcoin, and then so what? Ethereum is legit? Like what? Yeah. So that's a side point. Yeah.
It's so dumb, right? Like, for example, you purposely create that's why whatever FUD is an opportunity, especially if I know that I have enough influence, I would manipulate the market enough, so that I can get myself in, because I want to get my clients' money in as well. And trust me when I say this, the moment that you approve one ETF, then the floodgates are going to open. You think JP Morgan, Goldman Sachs, they're not going to be in. Maybe they're already in. It's just that they're not in with their own branding, but they're definitely in via other means, private means.
Definitely.
I mean, come on, man. This is like, are you shitting me? It's like you're saying, hey, there's money to be made. I don't want to make the money. I am a banker. I believe in the old school. Come on, man. It's banker and money, and you don't want to make money. Like, please don't give me that kind of bull crap, man. So I think if I had that kind of weightage, I do exactly the same. I just do exactly the same. I don't care about whatever people think, because it's about me making myself rich and making myself look good, and also my clients. All right. So, okay. So we have, of course, Charles, where Charles is going to cover I think a very important topic, which is to look at the long-term looking at rebalancing and looking at long-term investing in cryptocurrencies. I think this topic is extremely important because the news is the news, FUD and all that. I think, yeah, sure, we want to help people, but we want to help people also think far ahead. If they are already existingly in certain cryptocurrencies and they don't know what to do, or they've already liquidated, what should they do? So I think, Charles, take it away for this topic, man.
All right. So today, I think, get the perspective in hand. We're going to talk more about long-term investing, not really more of short-term. Of course, right now, the Bitcoin market short-term doesn't look good. But I would say in a long-term perspective, I guess I need to share my screen to get some sense into everyone. Because for those that just started in cryptocurrencies, maybe you got in maybe at around 3.7, 3 area. Or maybe like you're quite good enough, fortunate enough to catch this wave around 2.9. I hope everyone can see my screen. If any questions, do let me know. Okay, so let's say I think a very key important strategy is dollar cost averaging. I guess everybody would know about it. Okay, basically those that don't know about it, basically means that you buy at small amounts throughout a different period of time, and irregardless of the price. So what this means is that you will buy high and buy low, and overall your average would be lower than whatever you buy. So in that, you'll capitalize on the gains. At the same time, the loss, you're minimizing your losses at the same time. So let's say if you dollar cost average Bitcoin, like let's say you got in January, like which is around here. And then you started, let me get them out. And then you start buying here, you start buying here every month. Every month, let's say I put $1,000 of my saving into Bitcoin. 1,000 here, 1,000 here, 1,000 here. You can see that you get more units over here, and then you get lesser units as the thing go up. But at the same time, you're always invested in the market, and you do not, irregardless of price, you would flourish. So if let's say you bought Bitcoin here, and then, okay, let's say your overall average of Bitcoin is in the middle over here, based on everything that you bought all the way up to here, you can be sitting on a gain of like 100%. Just by simply buying one Bitcoin every month, $1,000, buying over time. And I guess, this is just a rough estimate. I think the gains are even much more, but you can see that the power of dollar cost averaging. So it's always good to get a stack of long-term portfolio and then start investing every month. And that's something that I do. And I think everyone in doing crypto grinders, we support like more of long-term growth, not more of the short-term pumps and stuff like that. That's trading. We do that as well, but more of more proper technical trading, which is better. At the same time, to grow your long-term wealth, so you can accumulate more wealth, accumulate more Bitcoins, accumulate more Ethereum. So in the long run, this is going to be very beneficial for you. So as you can see that even now, like even if the price drops, you're not afraid. You're going to buy more, because to you, when you look at this is going to be more ways for you to get more quantities of Bitcoin. At the end, in the long run, it's going to be beneficial for you. So dollar cost averaging is a very important thing that I think everyone should note of. So the next important thing I think is more fun is rebalancing. So for those that are in the Signal chat, don't worry, you'll receive this template. So basically this is a portfolio rebalancing tool. First of all, I'd like to give a thank thank you message to rather good his GitHub. So basically, he created a script on Google Drive. Basically, you can pull CoinMarketCap because I'm not a programmer. But I managed to take off his code and then put it into Excel. So it's a friendly piece where you can pull Excel data. So basically, this is a rebalancing tool where you create your own portfolio. You can see a portfolio of assets, and then basically you list the amount of coins you have, and then they'll rebalance it, and then from there you'll get a new coin. So I guess many of you will be wondering, what is rebalancing all about? So basically what it means is that what most fund managers or most hedge funds you do is that over time, they have a portfolio of basket of coins. So, or let's say stocks, and there's certain allocations. So it's like 30, 40%, 20%, 10%, and stuff like that. So basically what they do is that with that percentage, they'll have to maintain that percentage throughout the year. So let's say end of the month, let's say Bitcoin soared much higher than the rest of your portfolio. So your portfolio weightage would increase by a few percentage. So let's say, for example, we just do a simple case analysis here. Let's say, example, we bought, so we have 2.35 Bitcoin. And then now your weightage is like 34% because your value of Bitcoin went up. Let's say, for example, next month, the value went up. And then you can see that because of that, you have to sell some Bitcoin and then add it into the other portfolios to make sure that you get a balance of even out of the allocation that you had at first. Yeah, okay, this might sound a bit confusing, but so basically the rule is you set an allocation of the coins that you believe in the long term. So I would highly recommend Bitcoin and Ethereum because they are quite a long-term hold. And then from there, you can adjust your target allocation. And then you just type the number of coins you currently have. So let's say I have 5 Bitcoin with me, and then 10 Ethereum, and then 5 Dash or 50 Neo, 557 Quantum, and stuff like that. So you can see that my current allocation is 59% in Bitcoin, 8.3% in Ethereum, 4.5% in Dash, and stuff like that. So you can see that my risk exposure is much higher in Bitcoin. So what I got to do is I got to sell some Bitcoin and use that. So I need to sell $9,392 worth of Bitcoin. And then I need to buy $7,206 worth of Ethereum, $1,844 worth of Dash, and so on and so forth. And I need to sell 2,212 percentage of Quantum. So with that, it'll make my portfolio 30 to allocated to this amount. So the reason why you do this is that you can capitalize on the profits. So let's say like when Bitcoin, let's say Neo Moon, like from $5 to $50, and then you have a very big exposure Neo. So with that, you took some profits from Neo and use that to buy back into your other long-term holdings. So you can increase your holdings into those that long-term coins that have not Moon or maybe considered undervalued at that point of time. So with that, you can track your whole entire portfolio and you can consider it growing higher and higher. So at the end of the day, when you track your portfolio, this is what hedge funds do. And this is what, in a sense, economy and all these tokens, they're hedge funds, they run on this percentage. And basically, they use the Ethereum smart contract where they can enforce the buy and sell orders instantaneously. And then they charge you a commission and like 3% management fee. So in essentially, I'm just teaching you what most hedge funds do, and they'll still charge you a premium of 5 to 10% premium fees. And this is what they do. They just find a basket of goods and then they rebalance it every end of the month or end of the week. So I'll say that the best strategy is to buy on Fridays. I think I saw some statistic post on the news that this guy did like a data analysis from January all the way till now, that he allocated how many percentage, like which are the days that have the highest gains and the lowest losses. And they found that on Friday is the best day to pick up coins. So happened that Friday, there's always a red day or like sell off, people want to cash out to pay party or stuff like that. I don't know. But yeah, so Friday is a very good day to buy. Yeah. And also next thing, another important thing is do not get your risk exposure more than 15% in an alt currency. So let's say do not put more than 15%, even though if you believe so much in quantum or let's say BAT or something like that, you should never go above 15%. The reason why is because you will expose your risk by a lot, and then it will just it can mess your portfolio up. I guess maybe Ryan, you can share me on why you don't allocate more than that in your percentage portfolio.
Sure. I think this is basically from the time when we were already doing banking. We always believe that if we overexpose ourselves to one particular asset, okay, so cryptocurrency is already considered one asset class by itself. So if you have one asset class that's going to cause the whole your whole overall net assets, right, to be pulled down, right, then that means you are literally gambling. You're actually gambling because you're going all in on one particular asset class that is extremely volatile, and cryptocurrencies, right, are extremely volatile. I mean, you just look at Bitcoin, how volatile it is from where it was and where it is in a matter of days. So just Bitcoin alone proves a lot. What more everything else. So if you allocate, say, 15 to 20% of your investment portfolio into a basket of cryptocurrencies, that will be so much better, because especially when you pick the solid stuff, you're not going to take a dip compared to if you were to buy 15 to 20% on random coins that have small market caps. Just take note that whenever a market cap is actually on the higher side, that means, let's say we're talking about 500 million and above, the volatility is less because the movement of money and manipulation is just much harder on those levels. Now, anything else lesser than, say, 100 million market cap and below, the volatilities and the money making opportunities, of course, are both ways. You can make a lot of money, you can also lose a lot of money, and I think it's very, very clear. Been doing this ever since the beginning of the year. Been seeing everyone from. I mean, I've been trading cryptocurrencies ever since beginning of last year, and whoa. Okay, and what happened was volatility was not in existence at that time. Okay, last year practically the markets were very quiet. Now you're having every single coin having an opportunity to for example move 20 to 30 to even 40% in a given day, and there's a lot of opportunities for moon from the ICOs, and you're just having just masses talking about it over and over again. So I think when we talk about the current allocation is just to prevent you from being over leveraged. And when you wake up in the morning, you'll see, yes, everything goes red when Bitcoin goes red. But if you have a very fixed allocation, like currently now, my portfolio, because it's kind of diversified, it's only down 12%. Just saying. So that's the whole idea. If you're down 50%, perhaps you're over leveraged on one particular cryptocurrency. Yeah. And when you talk about clients' investments, right? Okay, let me just maybe talk about general investments on a whole. So when you look at a portfolio for a client, say for example they are trying to invest 1 million, you're not able to, as in by the guidelines of the bank, all right, to invest more than 20% for them into one particular asset unless they give you the go ahead. So if they have assets under management, say 1 million in terms of fiat in their bank account, and you decide to propose an investment to them, that particular investment should not be more than 20%. Now, if they want to go past that, that means they have to have a high risk score, and they are clearly aware of the risks involved. They are experienced. That means they have done, in the past 6 months, they've done a whole suite of financial instruments in order to qualify for them to even pass that 20%. It's just a guideline. And I think that guideline has helped a lot, especially for people who are in retail. That means everyone here who's watching this channel, you are considered retail investors because you are coming in with, say, 1,000, 2,500, and end up, you guys want to really hit it big. And you throw everything into that one coin. That's why you're very susceptible to all the pump and dump groups, because you want to quickly from 500 make a 5,000. Then after you're thinking, wow, I got lucky. That 5,000 maybe became 15,000. Let's say you got lucky again. But all it takes is just for you to get it wrong one time, and 50% to 60 to 70%, it will be wiped out, and you don't even, and it will be in a matter of 1 day or 2 days. Okay, because you just got the timing wrong. And what I'm trying to educate people ever since I started this channel was because I saw all these charlatans. Okay, they do not know what they're doing, and they're clearly just misleading the public. And there you go. So that's why the 15 to 20% rule has really helped out, especially those who in the Discord signal chat, I keep bitching and nagging like your grandmother. And then after that, people started to get it. And not only that, we have incorporated not just the 15 to 20% allocation rule per cryptocurrency. All right. We also started talking about laddering the buy-ins. Okay. Where that means, for example, if you wanted to load up 20% into a particular crypto, we would ladder the buy-ins, say anywhere from 10 to 15% in terms of gaps or discounts. So, for example, as you know, when it comes down to levels, we're always relatively conservative. So what we do is that we draw up the Fibonacci's, we look at the OBVs, we look at the overall candlesticks, and then we make a decision, okay, where are the levels that we can queue? And then we queue accordingly. And that way, if you are intending to queue, say you want to add 15% of allocation to your current portfolio, you don't go all in at one shot, at one buy-in. You ladder it in, so that way you can pick up the cryptocurrency. So today is an excellent time to look at levels. Excellent time. I think I did a stream this morning. I said, pick up Bitcoin below 4,000. And true enough, today is already 3,008. So I literally, instead of saying buy now, I just said queue at those levels. And yeah, people who are watching, they understand what I'm talking about, because these are the people who understand. They are patient. They are watching the stream properly. They're understanding what this is all about, because investing is boring, guys. Okay, investing is never fun. It's all about a lot of research, a lot of work, a lot of discipline, and that's how you make money. This is the only way to make money, man. If you think that you're going to be making money and driving a Lambo tomorrow, I think you better wake up your bloody idea. Okay, so yeah, Charles. So let's look at your rebalancing. For example, let's talk about your overall portfolio. Let's say previously, how were you investing? Maybe before you joined us, how were you investing last time? And right, bear in mind, Charles has an accounting and finance degree.
All right. So when I started, I'll say that I FOMO. Like I'm a college guy, and I'll make money and stuff like that. I say I heard my friend talk about Ethereum. It's like, okay, you can make money. So I just jump in the gun. So I went and take my savings. I signed up for Coinbase. I wanted to buy Ethereum. Then they kept my credit card. Then I was like, okay, I need to find that exchange. Then I just found it, and then I just bought Ethereum and Bitcoin and just percent. I mean, I just did my own percentage. Like, okay, I'll buy this amount, and I just bought it at market price without even thinking of anything. And I bought it around June, and I think that was near the high. Near the high where it was going down, and I was like, what is going on? Then everything went down all the way. And I panicked, man. I was like, oh my God. So honestly, my portfolio bled 30 to 40%. Everything. I lost 30 to 40% of my money. Real money. I was like, oh my God, something's wrong. I couldn't sleep at night. I couldn't do anything. So I realized that I had to really become smarter. And I really got to understand the market more. I think Taylor Jones mentioned it on the YouTube chat, said do your own research, which is very important. I always believe that at the end of the day, no matter what signal chat, no matter what YouTuber, or no matter whoever you believe online or whatever news you read, at the end of the day, I believe that you have to do your own research, your own due diligence. Of course, YouTube and stuff, they help you make it faster. But at the same time, you have to get the information yourself, and you got to put in the hard work. So with that, I really went to follow the channels, learn more about portfolio management, create my own proper portfolio. I realized that I invested in quite a few shit coins. And so what I did is that I allocated 50% short term, 50% long term. So I just put some in the long term and then 50% in the short term. So I bought Pay, Neo, and stuff like that when they were quite cheap, around $5 to $1 range. I think a few cents range for Pay. And then from there, I was quite fortunate enough to catch those waves. And by that time, I already had my portfolio strategy involved. And I realized that when my Neo Moon from $5 to $50 to $40, I checked my weightage. My exposure was my Neo took over 70% of my portfolio. Yeah.
And are you happy that you allocated?
Yeah, I'm very happy. I only allocated 15% from it, and it became 70%. So
because there's always talks about of course at that time when I didn't talk much about Neo, people was giving me the shit as always. Why don't you talk about Neo, man? Neo is going 100, bro. Yeah,
it won't go 100. It's too high. Yeah, so at $50, I reallocated most of my Neo and moved it all into other currencies. I got free Bitcoin, free Ethereum, and I got to increase my holding in Dash and other stuff that at the same time, so Dash went up. Then I also reallocate. So with that, this reallocating strategy, it always helps me reallocate because when I think the key important thing about using this tool is to research long-term value coins. You should buy coins that you believe in 1 or 2 years, or at least 1 year minimum. Though cryptocurrency is very hard to see a long-term foreseeable future right now, but you should look into long-term coins. My bag of coins used to be worse, and I really cut down because at the end of the day, I want to buy coins that can test and last the time. Though I don't make as much gains, but they're stable. Like Bitcoin itself has been around for so long, like how many years? And it tested time, which is more important to me as compared to a coin that has the potential to have that. Yeah, I'm not saying that it's not good, but yeah, I do miss out on the short-term gains. But that's where I have my trading account, where I can use to trade this kind of stuff to accumulate more stuff as well. Yeah. So
is this your current composition of the coins that you have? I mean, is this a sample portfolio, or this is exactly what you have?
Oh no, this is a sample, but it's sort of
Okay.
like, but in terms of I have all these coins in terms of the asset name.
Right. Yeah. So let's say an individual like yourself, and then maybe we ask Andy as well, and maybe we ask Eric. Currently now, let's say, okay, I think all of your age groups are kind of similar. So I'm a little bit older than the rest of the rest of the team, but maybe we will ask the younger individuals first. Okay, so Charles, since you're on the call, what is your current portfolio like? So how much of a percentage is proof of stake, and then how much of a percentage of that is more on growth cryptocurrencies? That means they are not they are still of course proof of work, but I mean, because you don't mine, right? So since you don't mine, the only chance that you can actually generate a passive income from these cryptocurrencies is the ones that you can actually stake. So any of your cryptocurrencies now, what is if they are proof of stake, what's the percentage? And, based on your age, I think you're slightly below 30 years old. What is your game plan? What is your game plan for crypto?
My game plan is basically I want to grow. Basically I set a goal for myself, though it's very ambitious. End of the year, 100K. That's all. That's my goal. I know it's very hard for my current standing. I mean, my portfolio is quite small, guys. Like I'm a student, but to me, I like to set goals and high. So with that, I also ask myself, how much risk am I willing to take? I guess a lot of people want to earn 100K. Everyone wants to earn $1 million, but nobody dare ask this question where you say, how much are you willing to lose to get the 100K? Are you willing to lose everything, or even lose more than everything? Yeah, I think that's a very important question to ask yourself. Like the same thing, like when you go to any casino or you play poker or any other thing, or like being stocks, you should always ask yourself, how much are you willing to lose? Even if you want to start a business, how much are you willing to lose? So I ask myself, all right, with this amount, okay, I'm willing to lose everything, like literally 100%, throw down the range, goodbye, kind of thing. You must have that mentality when you put money in the game. Yeah. So with that, then I started, okay, I could be more aggressive. So with that, I started putting more into high risk coins. So I guess a person shared with me one interesting concept, the principle of 3-3-3. So basically 3 high market cap coins, 3 medium cap coins, and 3 low cap coins. So at the end of the day, of course, you want your low cap coins to perform much better than, because they have a higher growth rate, but they are riskier in a sense.
Sure.
Yeah. So with that, I allocated like Bitcoin, Ethereum, and Dash. To me, these are the 3 high market cap coins that I believe in. And then for the mid cap is Quantum, Neo, and then OMG. Yeah, these are the 3. And then for me, there is for the low cap, I have BAT, GNT, and also Binance. Binance was one. Yeah, though Binance is like giving me problems right now. Stupid exchange, stupid China. But yeah, I mean, you see, at the end of the day, because my exposure is like, I have like Binance around like 5% in it. So with that, even if now I'm bleeding a lot, overall my portfolio is not down. Yeah.
Right.
Yeah.
And
so
and do you have a target in terms of how do you pace your I mean, okay, what's your take profit strategy? For example, like do you do it monthly? Do you do it semi-annually? How do you do it?
All right. So for rebalancing, I do it monthly. So irregardless whether, I mean, for rebalancing, you kind of, it's hard to tell because at the end of the day, I look at the overall portfolio. In terms of growth, I'll look at the percentage for the monthly growth. So let's say for the month, how much percentage growth? like that's where you see your benchmark in terms of percentage. So when I take profit, because mainly if the portfolio allocations go way above, I'll take profit. So sort of like, let's say new moon, then I'll take profit for that, and then that profit will go into those that didn't really profit much. Yeah. So at the end of the day, you get what I mean. But at the same time, also I do trading. So so you might understand that this is my long-term portfolio where I will not touch it, and it's in my cold storage. Yeah.
Okay. So you're pretty disciplined. You're pretty disciplined.
Yeah.
For someone who is still a student, and your 100K goal. I think that's very good, right? Because if you don't have a goal in mind, or you don't have a take profit strategy, or you don't have a rebalancing strategy in place, and this applies to everybody, you're not going to really be able to understand what's going on in this market. Because if you don't even understand your own portfolio, how are you even going to be able to know what to buy, right? You're just listening to everybody and anybody on YouTube. I think that is very, very bad. In fact, it's very risky because you're allowing someone else's expertise determine your decision. Okay, it should never be that way. It should be good to listen to people who are knowledgeable, who understand the space well, and they have done quite a bit of work in the space. And then from then, you do your own homework as well. Make sure it tallies, okay? And then from then, you put your money down because ultimately it's your money, right? So that is what I call a well-informed decision. Now, so Eric, care to share a little bit about, what are your thoughts about a portfolio? And what is your mid to long term goal? I mean, when you invest in this space, you don't have to share with people how much you have, but is it just
I got you. Me personally, I'm similar to what Charles has set up. Probably not 9 coins total. I look at kind of 2, 3, and 3, or 2, 3, and 2. I always try to keep at least 54. I don't go below 45% of my portfolio being Ethereum and Bitcoin or Litecoin, swapping in and out with Ethereum because they typically are the most stable, which will pretty much keep your portfolio relatively balanced, because at the end of the day, this is about being profitable, not being greedy fucking rich. For the midterm coins, I'm very big on OMG, Metal, and I go in and out between QDOM and Neo just because of what they represent. But OMG and Metal, to me, I've done a lot of due diligence, and there's just too many strong people on both of those projects, and they have too many connections for them not to be successful. As mentioned earlier, I follow where Vitalik is involved, or I follow where Vinny's involved, or the people that are similar to them, Anthony Diorio, because those guys are very strong people in this space. Eric Voorhees also. You've got to look out for the big names, because those big names are networks and connections, which get people involved and bring the bigger money to the space. And that's something that I always cue in on, in addition to doing my quote unquote background check that I run on people. But generally speaking, I do that. I'm a firm believer in Monero, not because I think it's used in a really bad way, but its purpose is very, very legitimate. And especially in this whole situation where China's going to create a lot of FUD, Monero is going to really, really prove itself to be strong. It's the best anonymous coin. And I'm like trying to compare a difference. Like, one of the projects I want to work on for everybody here is like the difference between using Monero and using a tumbler for throwing Bitcoin in, to show if there's like a major difference of the two, of trying to wash your coin to keep it like totally untraceable versus using Monero. So I think Monero is actually a pretty stable one. It went through tremendous growth, so this pullback's huge. But of the coins that are a little bit smaller that I look at so like I think I try to look at coins that are valued under $6 or around $6 and under. And for my own opinion, that's like, I love I've been in Lisk since 90 cents, and I'm unfortunately so pro them, and it's almost like a little too personal for me, which is really bad. Never make investing personal to everybody out there. But Lisk and Stratus, because of their real world application use, and Stratus's partnership with Azure, which is huge in IT. But the other coins I'm looking at are ZRX, Kyber, and what was the other one that I'm drawing a blank on right now? I love Navcoin. That's another really great underrated anonymity coin.
Navcoin, Charles,
Hey,
Charles made a killing. Charles made a killing on Navcoin, man.
Yeah, I mean, I've been looking into Navcoin for a really long time. I love the concept of the smart bridge. I think it's a while out, and I love the concept of IOTA. Tangle to me is such a goddamn wash, and they're not clear on what the hell it is. But I look at tech when it comes to the coins that are valued under $5 and $6 under, and I try to keep that at 25% or less of my portfolio. So I keep mid cap about 25%, big cap 50 to 45, and then 25 and under for small cap, because that's the best way to kind of keep yourself secure. And I take profit when I start to see a bull market end. So when you start to see a drastic drop, I pretty much remove all of my initial investment into either fiat, or I keep it all into BTC, because you want to use your money that you've won. The goal is to make money and use that. And if you're pulling profit in what you initially invested, it's become a savings account in a way, that or like a 401k, that there's not a ton of growth, but you have the money that you initially set on the side. So that's what, like, for example, in this market about 2 or 3 days ago, I pulled out a lot of my initial investment just because I want to know that it's secure, and I'll reinvest that when the market's low, whether we hit 3,600 or 3,400 or whatever the number may be, because that's going to show more growth. And that's kind of how I do it. So whenever I start to see a really serious downtrend or a pullback, I always pull out my initial investment. I leave my profit in, because that's a way to kind of play with money that you've won. And everyone loves to play. That's why we're all here, because we all kind of love the thrill of this gambling space of whatever you want to call it. Because in my opinion, this is gambling at the end of the day. This is all speculation and speculative. I just believe in the growth of technology, because I believe in the growth of blockchain technology in data transformation and data transportation. So that's my own personal belief.
All right. So a few things that I took note about what you just mentioned. You look for coins that are below $6. I mean, why is there a particular reason why you look for coins below $6?
I think they're a little less known, a little less traded, and I think I try to keep it at 25%, because those are 100% on speculation, unless they're like a very proven project that's up and coming. But to see, I made most of my money. I made a lot. I make most of my money. I made a lot of money in Neo, but I made even more money in Ants. And I got into that at $4 and $5, and the gains I got from that.
What made you look at it, Eric? I mean,
I'll tell you what it made me look at it, because
made you look at it?
It was Ethereum, but Ethereum that didn't base itself just on Solidity. And that to me is tremendous for adaptability and coming to market space, because you have to look at it from a tech perspective also. If blockchain technology is going to be in the mainstream and to get adopted from this, what I believe is right now a 1% view to a 50, 60, 70, 80% view of the whole world, it needs to have a real legitimate use. And that's what makes Neo and AntShares, or whatever you want to call it, extremely strong, because it can be used for JavaScript. It can be used for any of the .NET languages. Those are tremendous in this space, because most people are going to use it. That's what brought me to Lisk initially, and that's what brought me to Stratus initially. Stratus did base itself on C languages, and Lisk based itself on sidechain JavaScript. That's like a gigantic open source concept, is taking JavaScript and building sidechains off of a blockchain. That's extremely adaptable. That use case is extremely adaptable. Besides teams, that to me is the second most important thing, is what is the use case of a coin? Dogecoin, to me, at the end of the day, is a piece of shit, because it came up as the coin trying to be a fraudster and a jokester, but like people are still making money off of it. So that's kind of how I look at it. And that's why I look at Neo that way, because, I also, Da Hongfei is really legit. And this is going to be like the Western ignorant thing. I had no idea that A, his English was so goddamn good, but B, people are complaining that they're not Western facing at all. And he's come out now in multiple different situations, speaking to the Western voice and addressing their concerns, which is huge, which is why I'm kind of saying, everyone's got to pump the brakes on this bad AMA for Qdom, because you have to give people time to react and grow, because this is a brand new space, and you're not going to hit gold on the first strike. And that's kind of why I'm okay with all of this pullback and all of this reaction to this space, because it's extremely natural. And if you don't have these natural reactions, these natural pullbacks, then this is going to be the bubble that everyone claims it to be. And you don't want that, because we all want to be here long term. We all want to make money off of this the right way. So you have to be okay with pullbacks and allowing teams to grow, because this is like anything else in the world, and nothing is perfect. And if you believe that, then none of us would be here having this conversation.
All right. So Eric, I think you also mentioned that you have already pulled a majority of your initial capital out from the market. So was there a thought process that allowed you to do that? You did mention that if the market was to tank to a certain percentage, I think, of course, everyone wants to learn how to do that effectively. I think that is one thing good that allows people to be less emotionally attached to the investment environment, because they know that, okay, I've already pulled my initial capital out from the market, and I am able to sleep at night, because it's so-called like play money or monopoly money. So what was your thought process when you decided to do that? Like,
I look at TA. I try to look at TA and market cap. I'm very big on looking at the overall market cap. That is something that is tremendous for me. And what I do is I look at it over a month window, 3-month windows, and 1 week windows. And since the $5,000 mark, or 4,900, which was like September 2nd, 5 days later, we saw it dip and then rise back up to 4,600. And then the same thing was 4,900. 5 days later, 4,600 after a huge dip, and then a huge dip, and then 5 days later again to 4,300. That to me was a huge sign of this is a bear, because you're seeing that gradual downslope. And that is something where I said to myself, if that's the case, I know that I've already made money on this. We're going to be going below 4. I don't know what's next and how low we're going to go, but what I'd rather do is pull what I know is something I invested in. So in case I need to use it for something else, or in case, more importantly, I want to diversify my funds, because I'm like you, Ryan, what brought me here in the first place to you is that you're always said, diversify your funds, go towards gold, go towards other things that you believe in. I'm putting that towards silver is ridiculously cheap right now. People are like, for people
that's
who
what
are
I keep
saying,
telling people, man. I keep telling people,
like
it's not just about crypto.
Cheap. Mm-hmm. And it's about diversifying your. In fact, if in my honest opinion, only 10% of your portfolio should be in crypto, because this is so speculative. And that's how I've been able to make a ton of money. And I'm also a big call it a pessimist, but I do believe that the global recession that we've seen over the last 10 years, because a lot of the market has not been able to recover, or in the way that we would have liked, is not only going to continue, but probably get worse before it gets better, because a lot of the issues that have gone on in the world were just kind of consolidated to 4 more banks, or at least in the West that I'm speaking for. So I've kind of looked at things that always succeed in these times. The US is really big on guns and military. I started investing into those businesses. It's an unfortunate thing, and I'm totally morally against it, but like, it's something that the US is
man,
really
we're here to make money, man. It's okay.
And I invested towards that. I invested towards green energy, because companies like
how is green energy doing? As in, on a whole, how is that sector in terms of stocks? Is it even moving, man? Because I know that green energy is very long drawn. Any project that is in green is like,
well, here's the thing, is that it's becoming a price point that people can afford now, which is why I think it's a good entry point.
Okay.
And I love Elon Musk. I would do some really, amazing things to him if I met him in person. But I think Elon Musk is a brilliant guy, and the fact that he's made these roof panels accessible to people, the fact that he's made batteries accessible to people, the fact that he's trying to make an affordable Tesla accessible to people, that shows that this is happening. Most of the Scandinavian countries are like 100% reliant on green energy. I believe it's only a matter of time. People are talking about how Trump pulled out of the Paris Accord. That's not going to make a difference, because green energy is going to be more affordable than oil and gas and fossil fuels. And when that's the case, it's going to be a no-brainer to start moving towards these options. So Again, right now it is 100% not that profitable. I'll totally acknowledge that, but I think it's an early time to get in and kind of just throw your money, what I call as the throw your money, walk away philosophy of put your money towards it, walk away, maybe 10, 15 years later, you'll be like, I'm so glad I invested in that. But generally speaking, I invested in, I take pretty much most of the money that I invested just now, and then I pulled out like my initial investment, put it into precious metals, infrastructure, because I do believe that's always going to be a huge thing in the West, because we haven't done a big job of it since Herbert Hoover. Military and aerospace defense. And then again, I'm very big on cybersecurity because it's supposed to have an annual increase in spending of over $100 trillion year over year until 2022. That's like Verizon's come out with quotes like that, AT&T, who are two really, really big ones. And again, it's the space I work in. So that's why I invest in that. But biotech is another great one that a lot of people should start looking towards. Fintech, these fields are emerging, and if, as Charles would say, based on your Navcoin joke earlier, the time is to get in early, hold your hands, and be patient. And that's why I'm trying to tell everyone in this chat to be patient with Qdom, because Rome wasn't built overnight, and your profits aren't going to be built overnight. Be patient with your expectations, and also diversify.
So thanks so much, Eric. I think you made a lot of key points. I think the key takeaways were, of course, get invested into cybersecurity, get invested to green tech. Look at, I think you mentioned so many good points that it's just so viable that a lot of people should also start looking outside of cryptocurrencies if they can. And if any particular sector in terms of the stock market can offer you some dividend returns in those sectors, I think you should take a look at it. I think pharmaceuticals, though slow and steady, that's one aspect. You should look at pharma. Then, of course, if you have anything like utilities, telecommunications, these are the sectors that we should also start building up upon, because those are the sectors that are going to do very, very well, especially in times of what you call financial, when there's a financial pullback, these sectors will usually thrive very well, or at least keep much of their value, because growth stocks are going to take a hit first. I think it's the same situation in China as well. The Tencents, the Alibaba are doing very, very well at the moment. I think they have seen astronomical returns for the past, ever since Lehman crisis until now. So the question is, how long more do we have, with the debt ceiling already at 20 trillion? I think if I'm not wrong, Trump has already passed the bill to allow the debt ceiling to increase once again. I mean, right? So it will always just continue to keep increasing. Every family's per capita debt is just increasing. It's just like a whole, when does the musical chairs end, man? No one knows. So, I think we're just trying our best to make sure that we want to help the community, especially the Bitcoin community, the crypto community, to not just look within cryptocurrencies. Of course, the idea is to accumulate as much Bitcoin as possible, but at the same time, also we're looking at long-term financial wealth and sustainability. Right? That's the whole idea. Sustainability, and sustainability is boring. It's boring. You just have to keep going at it, keep attacking it, talking about it daily until people get it. Okay, so thank you so much, Eric. So now, Andy, I mean, how has your portfolio been like, and what measures or steps that you have been taking, and also please share with us your financial goals, in terms of where you see yourself in this space and how your portfolio is going to be moving towards, especially when we have experienced so much volatility in the past 6 months, 6 months to 8 months.
Well, this journey has been quite exciting thus far, to be honest. I think everyone will agree. We've been through a lot, right? The bulls, the bears, the dips and stuff. So, but the one thing that I really got out after a lot of reflection is that I realized the end game is to accumulate Bitcoin and Ethereum. That's the end game. In terms of crypto, okay, of course, referring to the crypto market. So, I've read this article before. I'm still sharing this article. I love this article, and the writer, he wrote that in the near future, in the crypto market, there will be about 25% that's Bitcoin, 25% will be Ethereum, and 50% will be odds. And the reason why it's odds is because everyone is coming out with all the shit coins, shit ICOs that you don't know where they're coming from, and it just raised market caps. Like there's a trick coin and there's whatever coin that came up today, right? And it overtaken almost all the coin in terms of volume, which doesn't make any sense. So the writer went on to talk about, hey, the long-term plan is just to accumulate Bitcoin and Ethereum. So he bought a lot. He's a big whale. He bought a lot and he forgo. He locked it in his ledger and he didn't look back. So that was his strategy. So coming back to crypto, it all depends on what's your strategy, what's the end game. For me personally, I'm looking in terms of Bitcoin. I'm not looking in terms of value. I'm looking in terms of accumulation in Bitcoin. I'm aiming 200 Bitcoins. I'm aiming 500 ETH. Simple. And I'm working in a full-time job for those who don't know me, all right? And I'm quitting, my boss already knows, so it's fine. But I'm quitting, say, around March or April next year. And I want to get to this goal by then, all right? I know it's tough, right? It's really ambitious, but here's the fun of it, right? You need to have a goal to work towards that. So I am there, yeah, but I'm working hard towards it. So here's the thing. Now, odds to me are just like penny stocks. They're like growth stocks. They are stocks that you don't know where they are going, right? They are not blue chips yet because nothing is formed, nothing is concrete. So like what Eric was saying just now, it's all based on speculation. You are buying into things that you think will work. Whether it will work, it's not proven. Nothing is done. They can run away the next day, and there goes your coin. So the whole entire idea here is you gotta be clear on what you want, the end game, right? So for me, to sum it up simply, I keep Bitcoin, Ethereum, and Litecoin in my ledger. I lock it. I don't really touch it much. And I cut into half. The other half is in my exchange where I really trade, right? And within the exchange itself, I switch it, right? So I have one group that's long-term accumulation, another group that's more for swapping. So example, accumulation could be in terms of quantum, OMG, Civic, right? I just like how Vinny is working it out. Maybe in terms of swapping, I find those, right? If let's say I want to do a day trading, I look into TA, and I feel that certain coins like Lisk, ARK, and for instance, Stratus has a lot of volatility. It's good for day trading. I don't do scalp, right? So it's good for day trading. So then those will become my swapping coins. So I take that, I make some profit in 2-3 days, and I get out with more Bitcoin. And then I send it back to my ledger. That's all. And just rinse and repeat the whole process. At the end of the day, bottom line, just accumulate Bitcoin and Ethereum and you'll be fine in the next 3 to 5 years. That's the long-term plan. Yeah.
Wow. Okay. So guys, you heard it from the team. I think it's very straightforward. You know, I think the most important aspect and what is the key thing that we are here to discuss is diversification. We are not over leveraged into any one particular crypto. We are staying invested, and overall we have a financial objective to achieve. You see, so once you understand the key perimeters in creating that portfolio of yours, and you have the end game in mind, then you just stick to it. You see, I think my channel is, I would say, it's not the most exciting. Okay, it's more of the most consistent. We're here to not always talk about the next ICO, the next hype coin, and whatever shit. We're here to get people invested so that they can have enough time to digest that information and keep. You see, people only get it after 7 to 12 repetitions. Okay, people buy stuff only after 7 to 12 presentations or reminders. Because at the end of the day, if I don't keep reminding you to keep buying Bitcoin, if I don't keep reminding you to accumulate, I don't keep reminding you to allocate 10 to 15%, you won't do it. Okay, you'll be jumping from here to there like my daughter who loves the next toy over and over. She'll play with that toy for maybe 5, 10, 15 minutes, and then after she'll go on to the next toy. And you will never ever be able to stay invested because you will jump from one crap coin to another crap coin. You get lucky on some, you lose on a lot on another, and then after it goes back and forth. After 2 to 3 years, you'll be like, what the heck have I been doing, man? I didn't make any money, or I made very little of it. But if you had just gone through the motion, literally listened to what we have to say and kept buying and accumulating, and just sticking to the laddering strategies, your life will be different. I don't even have any doubt about the strategies that we have in place for the chat. And I think the whole idea is just to help people get that clear into their heads. It's okay for you not to understand what blockchain is all about, where are we headed in terms of, I mean, look, developers are on another level. right? They think very differently. A lot of stuff we don't even understand yet. But what we do understand is that Bitcoin and cryptocurrencies, this whole decentralization is here to stay. That's what we're trying to say. Okay, so we're gonna start having a little bit of and we need to work out the signals with the chat. So guys, thank you so much for watching. I think today is a very interesting a webinar where we did a combined webinar compared to the usual. But I felt that today everyone should listen to what we have to say rather than just the signals group, because I think it's a collective effort for everyone to understand where the direction of Bitcoin is, how people should structure their portfolios. It shouldn't be just only for the Discord chat. I think it's for everybody, the subscribers on YouTube. So those who are on YouTube for the first time watching this, hit that like button. Remember to subscribe to the Crypto Grinders channel. We have a Facebook, we have a Telegram, which is all in the description below. And of course, if you are interested to sign up for the Signals group in October, registrations will be open soon. We would love to have you in our wait list. Yeah, guys, take care. God bless. I think we have overrun much in terms of timing, but we want you guys to stay informed. We want you guys to make sure that you don't get affected by the FUD, because the FUD is just a horse and pony show, man. That's all. A dog and pony show. Sorry, a horse and pony show. Dog and pony show is just meant to create a lot of emotions and for you to make the wrong financial decisions. And you will never be financially free if you cannot decipher and read between the lines. Okay. So that being said, thank you guys for watching. God bless. And thank you so much, Andy, Charles, and Eric for being on the meeting again. And hopefully we'll be able to come on board and do more of these kind of webinars for you guys. All right. Take care.
Take care, guys.
See you guys. Don't forget to subscribe, man.